and welcome to the last trading day of May. That's the last trading week, actually. Here's what's coming up in the next 55 minutes. We analyze Nigeria's first quarter GDP data. Get a check on the fastest growing subsectors. And Kenya's state-owned utility company, Kengen, sets aside 300 hectares for industrial park. And Ghana's cocoa regulator plans to borrow up to $1.5 billion by September to finance cocoa purchases for the 2024-2025 season. And it's great to have you join us on the show. I'm Ladi Williams, and happy Children's Day to all the kids out there. And a big shout out to the parents that are trying to make the kids happy, even though we have a cost of living crisis and high inflation. But first of all, let's get to the top stories that set your agenda now, starting with the oil market. Oil prices are holding a pattern in early Asian trade today as markets await OPEC Plus meeting June the 2nd, where producers are expected to discuss maintaining voluntary output cuts for the rest of the year. And we see Brent there. Looks like it's tending towards the below $80 mark at this point, $82.34 a barrel, 0.28% uptick. That's what we have in early Asian trade this morning. $78.85 for the U.S. grade WTI. Public holidays in the U.S. and U.K. are on today, and we're expected to keep trading relatively thin today. So we'll get more trading tomorrow, definitely. But let's get a check on the metals market. Gold prices drifted higher from a two-week low that was hit in the previous session as traders gauge fading hopes of U.S. interest rate cuts. Investors are trying to know, when are we going to get that interest rate cut in the U.S.? Nobody knows at this point. Might be 2025 at this rate. But we'll see U.S. Spot gold 0.51% up, $2,346 per ounce. Spot silver is also shining more than gold at this point, 1.77%. We see palladium not left out of this shine, up 1.55%. Price sub $1,000 for palladium at this time. All right, let's get you some top stories now. Nigeria's letter of credit payments have slumped by 63% in the first quarter of 2024 compared to the same period in 2023. This is according to international payments data from the Central Bank of Nigeria. The total letter of credit payments made via official channels for Q1 2024 was $204 million, reflecting a shortfall of about $344.75 million compared to Q1 2023 of about $549 million. A breakdown of the payment shows that January 2024 recorded a significantly lower payment of $58.33 million, followed by an increase in February of 2024 to $102.6 million, but still far below the corresponding month in 2023. The trend continued in March 2024, with payments dropping to $43.54 million. And the fact that the Bola Tinubu-led administration has begun implementing the right policies and reforms, that's no longer news, and it's been applauded by international institutions and private sector players in the country. The latest is from the managing director of PTML Terminal in Tinkan Port in Lagos, Mr. Ascanio Russo. Mr. Russo was a guest on Business Morning. He believes that while the path taken is right, reforms around stabilizing foreign exchange and infrastructure should be accelerated. Take a listen.
His administration came, I honestly was really looking forward for a brave man to do this very hard choice, to take these very hard choices. You know, rate liberalization and the scrapping of the fuel subsidy. And I'm really happy that Mr. Tinubu really was brave enough to take this decision. The most important thing in trading is really stability and transparency in the rate of exchange. And we have achieved that. Specifically for my sector, I will say infrastructure, it is key. And I'm very glad that this has been really given top priority from this administration. Beside infrastructure, of course, we believe that it's very important to streamline the clearance process in the port, because the challenge we have had in Nigeria is that the cargo stays in the port too long, and this is for a number of reasons, which concerns the clearing agents, customs, and all the other agencies involved. But again, even in this area, we have seen a huge improvement. Now everything can be done online. And the challenge really is the rate of exchange, really. If this is normalized and we see a certain level of normalization, things are definitely going to get much better.
Last week, Friday, we got big data for the Nigerian economy. We saw the first quarter of 2024. GDP grew by 2.98%, higher than the 2.31% seen in the first quarter of 2023. Let's look at the fastest growing subsectors of the economy in the quarter under review. We see the metals and oil sector there saw a rebound from a negative growth of negative 17.39%. in the last 3 months of 2023, and a big jump, 114% in Q1 of 2024, positioning it as the fastest growing sector in the Nigerian economy. We see followed by rail transport, pipelines, 66% in Q1. Financial institutions comes in third there, 33.30%. Insurance follows closely, 8.34%, with water supply, sewage and waste management, that's up 6.95% for the first quarter. Well, joining us for further analysis is Chinwe Agwem, Chief Economist, Coronation Merchant Bank, joining me via Zoom. Great to have you on the show.
Thanks for having me.
So first off, let me get your take on the Q1 GDP data. It's lower than Q4, definitely. Is that the effect of the 600 basis points interest rate hike we saw? And what's it telling us, basically? Is it aligning with your growth outlook for the first quarter?
Okay, thanks for that. GDP grew by 2.98%, as you said. I had actually expected a more sluggish growth number, let's say at best 2.3%. And this was largely on the back of the expectations around the usual post-festive slump when compared with the final quarter of each year, which is, of course, synonymous to festivities, right? In Q1, inflationary pressures did persist, with prices of food items escalating, and this, by extension, weighed heavy on consumer pockets. Of course, that's in addition to other factors that did contribute to squeezing pockets and purses. But I think it's worth highlighting that on a quarterly basis, the GDP contracted by a significant figure, which was minus 16%. So this positive growth that was registered in the year-on-year basis may very well be due to positive base effects. But the economic realities, what we're facing or what we're seeing, were indeed reflected in the data release from a quarterly perspective. Now, to your point around the monetary policy rate hikes, about 600 basis points in the first quarter of this year, especially those recorded in February and March, they were aimed, of course, at stabilizing the naira and controlling inflation, but of course did have mixed implications. An adverse effect is that rate hikes make borrowing costs more expensive for SMEs, which rely on loans for growth. Yes, it is true that the SME community within Nigeria has operated in a high interest environment for years, and some have found ways to cope, but just based on anecdotal evidence, the recent elevated levels of borrowing costs is impacting growth and expansion activities for SMEs. And why is this really important? SMEs account for at least 50% of the national output. And the domino effect of this can be seen in higher costs of goods and services in general as businesses pass on their increased borrowing costs to consumers. So bringing all these home to your question, I would say that, again, SMEs do account for about 50% of total GDP. Therefore, there is a strong interlinkage with the dynamics within the SME space. and national output figures.
Right, you did mention it came in stronger than your outlook. That's the first quarter GDP number there. But do we have to be worried about this month-to-month massive drop we saw from the fourth quarter of 2023 into 2024?
I would say that in Q2, April to be specific, we're still in Q2 by the way, but April to be specific, we did see a short-lived appreciation of the Naira against the USD. I think we saw it at 1,100 Naira per USD after hitting 1,600 in March, and that is in the NAFEM window. So far, we have seen a swing from appreciations to depreciations, which is the natural interplay between demand and supply in a free-functioning market. And that said, our current projection points towards another positive growth on a year-on-year basis. And then my personal opinion is that on a quarterly basis, it would slightly be better, but another contraction, perhaps slower.
All right, let's look at these sectors now. Which one stood out for you in the GDP report? We're seeing quite a big jump for that's the minerals and ores there. How's that looking for you?
I think I'll just highlight two sectors. Well, the oil sector surprised me again. It grew by about 5.7% in the first quarter. And that is the second consecutive quarterly growth that has been registered. And I guess the recorded growth can be partly hinged on relatively better production levels. Additional insights suggest that the improved performance is due to substantial investments, operational enhancements, and conflict resolutions among stakeholders. And I guess the reactivation of inactive oil assets. I think what we understand is that the FGN's efforts so far have renewed investor confidence to an extent, resulting in significant commitments, including there's a $5 billion and a $10 billion in offshore assets, and I think a $1.6 billion in asset acquisition. So that's interesting, and I guess it's a sector that we all should keep our eyes on given its importance to government revenue. I think the second sector, which surprised me, is agriculture, but not in a positive way. The growth figure for agriculture was unhealthy. It came in at just 0.2% compared with 2.1% in the previous quarter. For a sector that accounts for over 20% of total GDP, this sector should be performing way better. And I hope that we get to see policies that support a boost in productivity within that sector in the near to medium term.
Looking at the Q1 data, at this time, everyone's trying to find out or trying to project when inflation is going to peak in Nigeria. But I want to get your general outlook for the economy of in 2024. That's the Nigerian economy. Are you expecting a hard landing, a no landing, or some kind of soft landing?
Well, I guess it depends on the indicator I'm talking about. So if I should touch upon inflation, which you just mentioned, I actually at this point see it peaking between June, July, and then we'll see very tiny dips. And those dips, again, are really on the back of positive base effects. At the end of the year, right now, again, understand that these projections are always revised, but right now our current projection does show that inflation will remain above 30% towards the end of the year. But I see it peaking and then just registering very tiny dips.
With this data, what do you think should be the plan of action for the federal government and the CBN at this time, and a quick outlook for the second quarter of 2024?
I would say that regarding the CBN MPC, I guess that's what you're asking when you say CBN. The MPC's primary mandate is to ensure price stability, right, through the strategic deployment of monetary policy tools. I expect that the committee will maintain its inflation targeting posture, but just to combat rising inflation, which has a trickle-down effect on even GDP figures, right? In addition to monetary policy, effective fiscal policies are required to support efforts from the monetary policy side, such as fiscal tools that can help with easing supply-side constraints, mitigate inflationary pressures, as well as implementing structural reforms to address infrastructure deficits, enhance agricultural productivity, and improve just the business environment in general. All these can boost supply capacity, therefore dampening inflationary forces. But these fiscal support measures that I've just mentioned, and please understand that there's so many more. I'm just listing as much as I can given the time constraints. But these that I've just mentioned are more medium to long term in terms of the economy feeling the impact.
All right, Chinwe, before I let you go, I'm going to put you on the spot a little bit right now. It's Children's Day, and happy Children's Day. And definitely we know that times are really tough right now. What should we be teaching our kids, to navigate this tough world we're seeing right now, and what to expect in the future?
Oh, wow. I think that there's so many things to teach kids, but off the top of my head, I would say financial literacy can never be overemphasized. So using the right tools, books, classroom activities to teach kids on how to, understand financial literacy. Inflation is a good subject or topic to hone into in a manner that they would understand. So I guess my nutshell answer would be financial literacy. There's so many other things, but yeah.
Financial literacy. Well, I wish my parents taught me that while growing up. Thank you so much. It was great having you, Chinwe Graham, Chief Economist, Coronation Merchant Bank. Thank you so much.
Thanks.
All right, we'll take a break now. When we come back, head straight to the markets. Do stay with us. Let's begin with markets now. It's the first trading day for this week, but it's the last trading week of May. Let's bring in Willie Bong now with the details. And I'm seeing green on the screen.
Yes,
quite interesting.
Mostly green. Happy numbers for first trading days, looking good.
Let's make the kids happy.
Yeah, especially last week where we saw that last 3 days of the trading week in the red. We started off well, 2 days green, and then the last 3 days was red, and we ended the week in the red. But we're just hoping that this week, just because of the children, for the love of the children, the market, the investors.
Because if your parents make profit, then it's going to trickle down to the kids.
Of course. So we just hope that this bullish sentiments permeates all through the week, and we don't see any negatives. I don't want to see the reds.
Right.
Definitely. So I'm going to just kick off with markets in major indices in Africa. We're talking about Nigeria's NGX is in the greens. We see that positive sentiment returning. The markets closed last week in the red, but we see that rebound at intraday 0.25%. So still at 97,000. Hopefully we climb higher to 98. And we're seeing also South Africa's GSC is also in green, 0.06%. But on the flip side, we see Egypt's EGX30 down nearly 0.5% at intraday. On Kenya's stock markets closed Friday's trading session in negative territory. We see that 0.44% down. Kenya, we see that seesaw movement for Kenya last week, and we hope this week kicks off well. But let's look at what's driving intraday activities at the NGX. And joining us is Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Good afternoon, Ambrose.
Good afternoon. Thanks for having me.
Ambrose, the markets is off to a good start. We're just talking to Ladi and, looking at the trend, the sentiment report for last week, we saw very little buy for banking stocks, but the sector appears to be bucking the trend at intraday. What's driving this uptick, knowing that there's been hard hits by all the macroeconomic indices, we have, the MPR rate hikes? What's driving this uptick? We're seeing AXA, GTCO, FBN Holdings, Zenith Bank, UBA, all in the green at intraday. What's up?
Actually, I would say that macroeconomic data is very, very important when it comes to analyzing the market. Investors in our market have seen the latest GDP figure, and also at the same time we have seen the state of inflation. That is also forming a decision for investors. It's also driving their sentiment. So to calculate, look at the sector that drive the GDP. That's why we saw a decline or a contracting in the GDP for first quarter of 2024. There are some sectors that really did well in terms of performance. And investors looking at those sectors as part of insurance and the financial sector. Also, it's a clue that this morning, I'm not surprised I've seen the fugars are rebounding. We are seeing a buying interest ahead of their half-year result. Not forgetting that this sector, the first-year banks, come with entry dividend from the month of August and late July. If that happens, investors see that there's a pullback already in the market, and it's a great opportunity for them to buy low forward and ahead of what entry dividend. And don't forget that in any market, policy has a way of shaping sentiment too. because we're expecting that these banks are going to do the capitalization, and for that, a lot of the banks are sitting on a solid retained earnings, and if they only want to attract patronage for their for their right issue or public offer they want to do, you need to reward your existing shareholder, and that's a way that investors see that most of the insiders player in these big banks are accumulating position, knowing that yes, in anywhere in the world, when you're looking at the company analysis, you look at what is the insider doing. You see an insider selling off their position, it sends a red signal. But when you are seeing insider buying in volume, it also send a great signal for investors. Because we know that these banks have a lot of and they are hitting, they are sitting on. I believe that they are have fair result or dividend to go above the 50 kobo that I was saying last year, and that will change the narrative for the market, and that also will drive sentiment for them. I think I'm not surprised at seeing a kind of a kind of a reversal, an uptrend for the banking stock. For me, I would say investors should not just jump in expectation that let's wait and see what happens tomorrow and on Wednesday to give us a yes, it's a real rebound. If not, personally, I believe that towards the end of the month of June or mid-June should be projection for it to project forward for the expected entry dividend. But let's watch how the market will go. Like I said earlier, corporate earnings, economic macro data is very, very important to analyze market. Apart from using our technical analysis to know the resistance level and the support level, you have to pick your software before applying the technical analysis. What the GDP have received, have kind of review to investors in terms of sectors that have done well in first quarter. Because in 2023, those sectors that were seen that have performed well, we see that they also the same trend. We saw 2023, we saw the financial sector, responding to GDP. It started already in 2024. That's why I'm not surprised seeing investors coming back to work. That's the financial sector, insurance, and the banking sector. Yeah.
Okay, just speaking of, buying up stocks, we do know that these banks that, we're seeing this uptick for are going to come in with the rights issue, especially because of the recapitalization, drive. Do you see this bullish sentiment from banking stocks continuing, or do you see a downtrend as the reason is because we do not know how much these banks be coming out with in the market for when they release the announcement for the rights issue?
No, especially the volatility will continue in that sector because, as you just said, all eyes on what will the right price. And for me, if you really want to hit your target, most of them are coming above what the CBN have put as 500 billion. We're seeing some more doing 750 billion, some 550 billion, some are coming with 150 billion to add what they have to make it work. It depends on the bank. And for you to achieve that, you must put your right issue, either a little above the market price, or you bring it there, so that it will be at or low, above the lower the market price, so that you can attract patronage. It depends. But what that is sure in that industry that most of the major shareholders in that industry are already set to kind of take their right, and that is a boost for the industry. For me, investors doing like this pullback to buy good one, but I believe that this is not enough to say that market are kind of a turnout for or what called bottom out for the banking sector. Must see how tomorrow goes and Wednesday or to compare. So in technical analysis, one move does not give you need confirmation to say fully the trend has been established. This is just because they were seeing a kind of a reversal. Want to see whether that trend will be sustained tomorrow and Wednesday to say fully yes, banking sector are back and uptrend.
Okay, so we saw the GDP numbers that came in on Friday, and we did know that the services sector drove, the largest contribution to that, to real GDP. Do you see the stocks that are listed on the stock exchange, companies, in the services sector that are listed on the stock exchange, being bullish, or investors being bullish on them as a result of that report?
Yeah, actually, that every investment is against the future. Seeing that the first 3 months of the year have given insight where we're starting the new financial year for this company, that the service sector have really come back again powerfully as they did in 2023. It's for a wide thinking investor, portfolio rebalancing and sector rotation will continue. It's time to come back to that sector where you see that there's potential for them to do it because price feed on what on earnings. And the company sector is doing well, their numbers are about to be positive, and that's how to invest. And it also support their dividend payout. For me, the investor coming back to insurance, coming back to banking sector, like NACO in the efficient service sector, or even despite that, we've seen that the agri sector was really not impressed in terms of contribution. But number that came from that sector in Q1 from the two major companies there, even the lower ones, livestock, they are positive numbers. A sign for investors. All eyes are still on what will the oil sector do with all this oil price going up and down, and also the outcome of OPEC meeting coming on the 2nd of June. This also guide investors where to go. I believe that service sector should be placed investors should be right now.
Okay, so it's in celebration of Children's Day. Today is Children's Day. We cannot but talk about it. What stocks should investing parents be looking at, especially now that the market is biting?
No, for me, parents, really almost take their children nearly every journey to whether to go and drink ice cream or to go and do fun fair here. And the fire is good, but I believe that we start teaching our kids how to invest by setting example. Let's start buying good stuff for these kids at this time, and they know that this stuff we are buying for them. Let them know and what we are doing so that they can buy that culture. Because I tell you, if we leave it for only the teachers in school to teach them investment, I think we are not doing to do them good. For not to do them, let's tell them what we are doing as parents. If you are investing, carry your children along, and also this is time for you to, as a gift for them, buy them good stock that will grow with time. Since it's a future thing, also they are growing. Look for good stock, also that have future in terms of their performance, in terms of their prospect. That's where you put money for them. Good. Go and buy banking stock. I tell you, no, banking stock is a place because whether the economy is in progression or there's a grooming economy, banks will only making money. For me, it's better to watch for kids, really, for those that have a good potential in the banking industry. That's where they should put their money for them.
Okay, so they should put their money in the banking. Is there any other growth stocks that investing parents?
Yeah, before now, talk about all those call them good chips in the consumer goods. For now, they are still shaking because of FS is still hitting them. I know that they will be resolved going to the future, but let's stand for the service setup first. Let's start for stock like the NACO and the Access Bank, GTB, Zenith Bank for them because we know that these banks have future and they are come to stay.
Okay, so how do you see the market ending today? Is the first trading day for the week and the last week one for the last week trading week for the month of May? How do you see the market ending today and for the rest of the week?
Yeah, actually, there's another that sell in May and come back in October. And our market had defied that sell in May for almost 5 straight years in Nigeria here. But we're seeing that April have started this pullback, and that May this year has also joined. We probably hope to see a down May for this year, but for this week we're going to expect a mixed market. Why for today market will close in the green.
Okay, so very much so you're saying that which investors, I saw you saying investors should sell off in May and come back in September. In
October.
In October. So investors right now should be selling. That's the key takeaway here, right?
No. That is added in the trading world that sell in May and come back. In Nigeria market are defined for straight 5 years, but we are seeing that this year now, like our market is going in for that. But the month of May has not been so good for investors. Might likely close in red. Why June might take also to start ahead of a half-year result. But I believe that most investors understand that this is time to buy into deep, not really to stay away from the market, because our market most does not go in line with the foreign market because of our popularity here in Nigeria. Must understand that our environment and the trend that we follow here.
Okay, so what's the close for today? I didn't catch that. Is it red or a green from you?
There's no market flowing in the green. Yeah.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your perspectives. Always good to have you.
Thanks for having me. Yeah.
So we move on to Middle East now. Major stock markets in the Gulf were mostly negative at intraday. We see Abu Dhabi down 0.1%, but Dubai, however, was in the green at intraday, and this was, helped by gains in the consumer finance and industry sector. Now, still within the region, looking at that whole UAE region, we see Saudi Arabia down at intraday, pressured, a lot of pressure, by, the 1% dip. We've seen those stocks there. Earnings have been coming in, and a lot of them have been reporting like negative results, and this, dampened investor sentiment in that region. And also, we see Qatar also down 0.47%, and this was also because of a drop in Qatar's National Bank, the region's largest lender, and a 1.1% fall in United Development Corporation. Now, let's look at U.S. markets. They're closed for a Memorial Day holiday, but we'll just head to Asia, where the markets rose today as industrial profits in China, is coming in for the first 4 months of the year, and that's according to official data. Japan's Nikkei 225, we see that up 0.0. Up at the close of to close the market to end the trading session, it was climbed 0.66%, and we also see the broad-based index, that as a topic index, also ending 0.87%. Now, South Korea's Kospi rose 1.32% to close at 2,772, and I will also see mainland China Shanghai index climbing over 1% to 3,000, over 3,000 points. We also see the HSI in Hong Kong, and that's also adding 1.17%. China's industrial profits rose 4.3% year on year. And in January to April period, and that's according to the National Bureau of Statistics. Now, Australia's S&P ASX also gained 0.79%, snapping that 4-day losing streak in that region. And Australia will also be announcing its inflation data for April on Wednesday, with analysts expecting a modest dip, Ladi. So, you know, inflation numbers have been coming in. We see that PMI, and China is expecting a PMI this week. So, more bullish sentiment because we've seen that, you know, rise in industrial action.
Right.
And so,
I will definitely be tracking the yen. You know, at this time, we're seeing a lot of intervention there from the Bank of Japan. We'll see if they continue, you know, with that. And talking about selling in May and going away, I'm wondering who's selling in May. Is it?
Like, as Ambrose said, the market in Nigeria has defied all that, you know, theory in the market or the saying in the market. It's more like, you know, keep buying. You don't know when it's going to go up or down.
So somebody's selling, somebody's buying, definitely. But the person selling definitely made some profit.
It's always a zero-sum game in the market.
Right. Thank you so much, Will, for the details there. Let's take it on to Europe now. We see French President Emmanuel Macron is in Berlin, and it's not a regular visit. It's the rare state visit, the first by a French president in 2 decades. A significant site there just before the European Parliament elections, and that's early next month. For more now, Wada Emran joins me from Berlin. Great to have you, Wada. So tell us the significance of this trip.
Thanks for having me, Ladi. This trip is definitely significant as it aims to show how the French and German relations are doing well despite rumors and disagreements in the last few months. Germany and France are often viewed as the economic powerhouses of the EU. So this visual of them standing together with smiles, it's a nice thing to project for voters. French President Macron was greeted by his German counterpart, President Frank-Walter Steinmeier, at the Bellevue Palace here in Berlin. This trip is more important than other trips that Macron often takes to Germany. A state visit involves a full military view, a welcome with the French anthem, and visits in important cities. The two countries basically want to say, we're united and we're doing good, for now at least.
All right, but France and Germany disagree on many core issues. Does this trip change any of that?
Yes, definitely. Some of the fundamental disagreements are much bigger and are on global issues as well as on some EU topics. For example, on the Ukraine war front, France has maintained and continues to do so that sending troops to Ukraine is still on the table, while Germany vehemently opposes boots on the ground. This topic has shown the opposing cultures around security and defense in both countries. Germany is the second largest supporter of Ukraine, right behind the US. Another topic the two cannot seem to agree on is the topic of China. France has openly said that Germany remains reliant on China for raw materials and trade deals. There's a lot of talk about whether the EU should follow the US route of imposing excessive tariffs on Chinese imports, something that Germany aggressively opposes. The famed and popular auto industry in Germany is tight with the market and business in China. So a tariff system would not be in Germany's favor.
All right, at the start of the week, what investors keeping an eye on Europe?
Well, markets in the UK and US are closed today. Memorial Day holiday in the US and a bank holiday in the UK. So not much news from there. But oil prices, on the other hand, have steadied after losses last week, which touched the lowest since February. Otherwise, it's a week filled with data reports coming out. A U.S. inflation report is due this week, which could set the stage for interest rate cuts, but that's months away. Eurozone inflation data is expected at the end of the week, and the ECB will reveal its policy next week. Asian stocks are enjoying a high, with stocks in Taiwan reaching a record high. That's all from here today.
All right, thank you so much, Varda Imran. It was great having you. Thank you.
Thanks for having me, Ladi.
All right, now let's get a check on other countries. Now we see the long-awaited energy park in Olkaria, Naivasha will be operational in a couple of months, offering investors electricity at a subsidized rate, and that's in Kenya. Already the Kenya Electricity Generating Company, that's KenGen, has set aside over 300 hectares of land in the geothermal-rich area of Olkaria. The industrial park, according to the electricity generating company, will accommodate a blend of industrial and non-industrial activities with electricity supplied at subsidized rates. And to another conversation now, we see Allison, a global public relations agency, they've launched the Africa Business Cultural Intelligence Report in celebration of Africa Day for 2024. The report focuses on 5 key countries: Nigeria, Kenya, DRC, Morocco, and South Africa. Well, joining us now is Claudine Moore, Managing Director, Africa for Allison. Great to have you on the show.
Hi, good afternoon. How are you doing, Laddie? Thank you for having me.
I'm doing great, yeah. Fine, great to have you. So, quite an interesting report there. Talk to me about the thinking, behind creating this report. And we see the focus is on business cultural intelligence in Africa.
Yes. Yeah, so as we all know, and I'm sure as many of your viewers know, Africa is projected to outpace global economic growth this year. And what that looks like is very different across the region. So we wanted to produce a report that had insights into what that looks like, this growth in every region of the continent: North, South, East, West, and Central. And so we took different countries in those specific regions to get a good cross-section across the continent. It's really important for the world to understand that Africa is not a monolithic continent, which is why we wanted to show the variation and the juxtaposition of differences between the different countries.
Right, and it's a diverse continent. Talk to me about the focus. What informed this focus on 5 specific areas?
Yes, so the 5 areas that we focused on were business growth drivers, media landscapes, the tech ecosystem, female entrepreneurship, and we also had a special section on the US-Africa diaspora. So really, the growth driver section, that really provides a snapshot into what the growth drivers are in each particular country. We all know that every company is a tech company, and it's tech and AI that's really going to help Africa leapfrog in terms of development. So we took the tech ecosystem in each country and compared and contrasted and analyzed what that looked like. Media is very different in each of these African countries. So we just decided to look at what media looks like and what media reports on and how they report and who they report to. And then finally, female entrepreneurship, definitely not finally female entrepreneurship across the continent. But that is huge across the continent. It's bigger in Africa than it is in any other continent in the world. So that was important to analyze. And then finally, the US-Africa diaspora, it's critically important. I think one of the surprising insights from the report was that last year in 2023, I think the US diaspora contributed, I took in my notes, 20 billion to Nigeria. So you take that and you look at that across the continent in different countries as well. That's a huge amount coming from the US diaspora into the continent as well.
All right, talk to me about AI at this time. We've heard some, say, Africa has a lot of issues at this time, and we shouldn't be focusing on, AI, at the moment. Talk to me about what AI brings to the table at this point.
Well, I think AI is a brave new world for everybody. That's not unique to Africa. I was just at the Africa CEO Forum in Kigali, and AI was what every CEO was talking about. Some of them had an idea of what they were doing, and some of them are still trying to make that decision. So what we can say, I think what everybody can say and what everybody can agree with is that every single company, it doesn't matter what industry or sector or country that you are, country that your business is in, has to focus on what AI is doing for your specific industry. I think that's not unique to the continent. That's unique to every business in the world. So it's the key here is for every single business to really find out what AI and how AI is changing your specific sector, and then what that means to you as a business.
All right, looking at the report at this time, were there any surprising trends?
I think one of the surprising trends really was just the focus. Let's just focus on women. I was really surprised to see and find out. I mean, a staggering 60% of entrepreneurs in the continent are women. That means, and albeit informally, but 60% of entrepreneurs in the continent are women. And so what that really means is that whereas before sort of, supporting women in business was like a good sort of social imperative, now it's actually for every single country across the continent, now it's actually a really sound and solid economic strategy, considering the sheer numbers of women and entrepreneurs, albeit many of them are quite informal in many cases. It's still a huge mass and a huge number of people that should be supported, and that can really help benefit the economies.
Looking at the report at this time, what's your outlook right now for female-led businesses and startups?
They still need help. They still need support. And I think I just mentioned a moment ago about the sheer number. That number of 60%, really, most of those businesses are informal. Where women still need assistance is when it comes to creating bigger businesses, bigger organizations, more formally. Resources are still needed. African female tech founders still are woefully behind when it comes to their male counterparts in terms of investment. So whilst it's a rosy picture in terms of numbers, I think when we really drill down and look at it in terms of scale, on the more formal end of having bigger and larger businesses, women still need to be supported, and there still needs to be an emphasis on gender lens investing when it comes to female founders as well.
All right, I guess let's try to empower the women more going forward. Thank you so much. Great having you, Claudine Moore, Managing Director for Africa at Allison. Thank you so much.
Thank you.
All right, let's get some other stories now in West Africa. We see Ghana's cocoa regulators planning to borrow up to $1.5 billion by September to finance cocoa purchases for the 2024-2025 planting season. Delays in securing an $800 million loan due to low cocoa output prompted CocoaBot to withdraw $600 million and cancel the rest. The syndication is expected to proceed with banks assessing the situation, and production for the upcoming season is projected to reach 810,000 metric tons, despite challenges such as adverse weather conditions, disease, and smuggling. Well, this week, the cryptocurrency market is poised for a series of key developments, including significant network upgrades, new listings, introduction of crypto ETPs on the London Stock Exchange, and a crucial economic announcement from the U.S. Treasury. All of that is going to play into the crypto market this week. But let's look at the color on the screen right there. It's majorly red, at this point, with Bitcoin there having a pullback, 0.87%, $68,559, lower than that 70,000 level. Ethereum still, holding on to $3,908, up 2.67%. Solana, 1.34%, but huge pockets of red with pullbacks in the market, even though we've seen some quite an interesting uptick there with the total market. Let's look at the sentiment in the market now. We see it's still quite a greedy market this time. No fear yet in the market. That's according to the Fear Greed Index for the market, 74 points. So it's still very greedy. Investors are still trying to get some profit out in that market and still pouring money in this time, showing greed. Let's look at the top stories now. Normie, a meme coin that was hacked recently, their blockchain. The team are saying that they're negotiating with a hacker who exploited a vulnerability in the project's smart contract. This exploit led to $41 million plunge in Normie's market cap within just 3 hours. One of the downsides of trading the crypto market there. Then we see Binance executive may die in Kuje prison, and that's according to the council representing Binance. That's Lukwan Oyebode. The legal representatives are saying that his condition right now, he's not feeling too good. That's Mr. Tigran Gambarayan. And the company executive is currently in trial with the firm in Nigeria. So definitely a lot to think about there. Then talking about Ethereum Classic there. Ethereum Classic, the miners are preparing for a mining rewards halving on May 31st. So not only Bitcoin is getting halved at this time. Ethereum Classic, it's one of the oldies in the market there. And so whatever the miners make from mining Ethereum Classic, that's going to be halved. So we'll see how that's going to play into Ethereum's price, Ethereum Classic price action. We know how that impacted Bitcoin. That's the Bitcoin halving. Let's bring in Emmanuel Anyasi now, crypto influencer, joining me via Zoom. Great to have you in the show, Emmanuel.
Hello, Williams. Good afternoon.
Fantastic.
Thanks for having me.
It's great to have you. So there's this trend now we're seeing in the crypto space. You see a couple of people on their phone or their gadget, and they're just tapping. That's supposed to be some kind of tap to earn. Tell me about this new trend.
Yeah, it's going everywhere like a wildfire now. Notcoin actually started it. So Notcoin is a project that is built on Telegram, on the Ton blockchain. So Ton blockchain is just like a sister company to Telegram. Let me just say, like, it's the blockchain for Telegram users. So Telegram is a messaging app. So Notcoin, I can remember I hosted several spaces on Notcoin on how people can actually join and get on board. So the tapping stuff was just like an airdrop for users to actually come in. It was like a meme coin. It is a meme coin because there's no any utility. It's just basically just tap, gets a fair share of the market supply, and you can sell on listing. So Notcoin went ahead and listed on Binance and other major exchanges out there. Currently, it's around 700 or 800 million MCAP. Notcoin had a very huge success because many people in Web2 started tapping, and they discovered that at the end of the day, they had over 35 million users who actually participated in that airdrop tap. So new project actually discovered that is a good marketing strategy to actually onboard people and also get their products, the numbers and the visibility they need. So currently, there are many projects currently on board that people are tapping. They have
but Emmanuel, how does the tapping, how does that help the network of that crypto platform?
So it's just like airdrop. Let's take for instance, like a company, maybe Indomie or any company, all these conglomerate want to come into the Nigerian market. They have to do some kind of free gift to people to actually test the products and then get a product to actually circulate for people to actually know their product as a form of awareness and marketing. So that is how it is in crypto too. So this airdrop tax is just to get people on board on your platform, get them to do some kind of few things. But this tapping is just a way. They're like, okay, let's say Bitcoin is based on proof of work mechanism. So some have proof of stake. So this one is just like you tap, you earn, you tap, you earn. So how much as you can tap or refer people, the more coin you will have. So the thing actually, like the minimum person, the least anybody can make was like $100, which is actually a very big win for everybody. Over 2 and 3. I could know of some ladies that actually made over $100, $200, $300, just free money for just, but they were actually tapping. You have to do something. You have to tap and get this coin. So there are many out there now, and people are just going crazy about it because they discover that it's a new marketing strategy and it's a good thing that can actually get many people on board. So it's everywhere.
Okay. But one thing I've noticed about, the crypto space, at this time is when one trend starts and, a group of people profit from that trend, whatever comes next after that are usually scams.
No, it doesn't work like that. You can't compare a project who just onboarded a few thousands of people. We are talking about projects who actually embody millions of people. What is crypto if not numbers? Crypto is all about numbers. So when people say folk project cannot do well, tell me which project in the crypto space that is not folk apart from Bitcoin and Ethereum. Even Ethereum was folk from Ethereum Classic. Ethereum was folk from Ethereum Classic, and Ethereum is doing well. So many projects have been folk from Bitcoin, like Litecoin was folk from Bitcoin, Bitcoin was folk from Bitcoin, and they did well. So it all depends on the team and the strategy they actually want to implement. when you have a large number of people, like this tapping is actually helping this project to do.
All right,
So
let's look.
how many of them are up for.
Right. Well, I'll keep tracking that tapping trend right now. See how it plays out.
You should be tapping to him. Actually, earn good money from it.
I hope people don't spoil their phone screens by the constant tapping.
No, you can't spoil it. You can't spoil it. I tap almost all of them. I made a lot. I made like $2,000 or $3,000 from Notcoin. So it was like a free money. So.
Right, I know people love free money, definitely. But let's talk about another issue right now. But this time, in Nigeria, and we know the Binance executive that's still being held at this time, and the council is saying his health is at risk right now. How's the crypto community seeing this development?
Well, it's no longer like the crypto community is not actually, especially the Nigerian crypto community. People are not actually concerned about that. People just want to do their business and go. So, well, we have actually laid our voice. I've actually laid my voice that actually these guys, actually they should have their day in court and actually have a fair hearing of whatever is going to happen. But whatever happened to him, I think Binance is taking care of it. They have a good lawyer, Isan, on the case, and they are doing all they can do to actually get him on board. Maybe they should involve his own country. They should help him out too. But it's crypto where he knew what he actually signed for, and if he has any case with Nigeria security outfit and everything, I think they should have a way to actually resolve it. But with his health issue, I don't know. I can't say whether it's health or not. But I've made my complaint that crypto is not the cause of the constant naira devaluation or constant naira falling in the forex market. That the PPP is not to be blamed, but the CBN and the people managing the country need to actually look into what is actually causing this thing on the long term. We see naira actually going from the 1,050 they dumped it to, it's actually come back to like 1,500. So see that the demand for dollar is actually high. I see a place where you actually saw the poster of a building, they are selling $2 million in Ikoyi. So people are paying house rent. People are buying these things in dollars. So why should it be like that in a country like Nigeria? The government needs to look into all these things. Why should people be paying school fees, paying all these things with dollars? All these things actually causes with the fact that people actually go abroad to school, Japan, all those things. So many things with the manufacturing, They need dollars, they need forex. So
talking about that $2 million house, I don't know if it was really, did it look really nice to you? I saw it trending on social media, $2 million house.
Yeah, I was actually want it. I actually want it. I've been to many countries, man. I tell you, laddie, those houses on the island, they're actually overpriced. Very, very, very overpriced. Yeah, you don't actually want the money because if you want to buy, if I have $2 million, I want to go and buy a house. It's better I go and invest in a place like US. I can get the value of my money, at least a steady light. I can even get back the money if I want to even put it for rent. But all these buildings, you buy $2 million, what's the maturity period for you to get back if you want to actually do it? I don't know. Maybe that is why most of the buildings over there are actually locked.
Anyway, but we do have some fine real estate in Nigeria, definitely. And we know some, developers are doing a great job right here, giving us some nice, designs. But that's a story for another day. But let's talk about this Ethereum Classic halving, at this time. What are you expecting? A quick one. What are you expecting for Ethereum Classic? Is it going to move the way Bitcoin moved before the halving?
No, I don't think so. Maybe you can actually get a small rally like Litecoin did. Litecoin halving actually came before Bitcoin halving, and they did some kind of rally, but there was no trend. There was no much noise about it. You see, crypto is all about the numbers and the trend. Who is talking about it? How many people are talking about it? Ethereum Classic look like it's dead, but you can actually make profit from it if you can take a position and try and exit before or after the halving, because with the Ethereum ETF actually passed, we should see some volume coming into Ethereum, but are they going to go to other pairs, other altcoins that are actually dead to revive them? Maybe just small push, and they died a natural death. So
All right, we'll keep tracking that. Thank you so much, Emmanuel Anansi, crypto influencer. Thank you so much.
Thank you very much for it.
All right, that's the show today. And if you're going to tap, make sure you don't spoil your phones at this point. Remember, you can visit channelcv.com for more updates. I'm Lade Williams from me, the team, right here at Channels HQ. It's bye for now.